Good morning, everyone. My name is Desiree Rusted. I did not tell you who I was the other day because apparently it was, uh, it was a secret. No, just kidding. I'm Desiree Rusted, and I'm the training developer for the Montana Public Health Training Center. And we welcome you this morning to Trisha's presentation. Um, Tuesday was really good. It was full of a lot of information, very useful information if you're managing any grants or any budgets. So I'm looking forward to today's presentation to see what other tools we get to use. And with that, I will turn it over to you, Trisha.
Okay, I'm going to adjust this chair. Okay, felt like I was falling into the computer. So good morning. Thank you to those of you who are back. It's good to see that we didn't scare everybody off on Tuesday. So hopefully you guys are ready to rock and roll and do some calculations, because today, while it was pretty lecture heavy on Tuesday, today's a lot more interactive, and I'm hoping to give you some things not only to think about for your actual budget, but also some things maybe that you can use in the future. So there's a few tools that we'll go through today and kind of quickly. So if you happen to get lost on a few of them, you have them as resources in your folder. And then, also some of them are just things that, like I said, I'll show you a relatively quick example, and you may be like, whoa, but a couple of them have like answer keys to go with them that you can look at later. So if it is a little fast, or we don't, you have a little trouble keeping up, or you're thinking, what are we doing here? But a lot of them are actually, like I said, things that you can use in the future. A couple things are ones that are templates that we're going to use for an example that perhaps you could use as you're moving forward later on. So that's where we hope to start today and what we're doing for that. So I want to just kind of start a little bit. I know I technically assigned some homework that I said I wouldn't check for today, but I do want to, I'm hoping if you haven't done so, that you will take a look at your actual budget. And if you haven't figured out who the financial person is yet in your department, make sure you're doing that, right? You want to set up some sort of meeting, talk about those indirect costs, things of that nature, see where they're going and what's new. Is there anything coming up that you should know about that's going to make a difference for your budget? So a lot of what we're going to talk about today is sort of getting familiar with that budget. What does it look like? Where could we see that there's problems? What do we do when we have to adjust our budget, right? So we'll call it budget cuts, but then we're going to look at it in a way where we might make adjustments to the budget, and maybe some tricks to where we don't have to think we have to cut across the board. And then also we're going to talk about the budget narrative, which is what actually should be going with your request when you renew your grant. And that would be whether you're doing it through a foundation or through the state or through the federal government. You're going to want to do that, and you're going to want to be as detailed as possible, because that's going to help you get the most amount of money when you're looking for those grants. So let's see. Just want to do that. I think I'm going to go ahead, and I'm going to just try to pop this over on top of, I already have the slideshow ready for today, but let me just see if I can't bring, and like I said, I gave you the identifying the direct and indirect costs. So I'm actually just going to pull over the answer key. Oops, that's the wrong one. So what happens when you have it all right here? Here we go. And then I will remember to share my screen in a second. Will help. Okay, screen 2. Okay, can we see that Word document? Okay, good. So I'll leave it with that. And then when I get ready to switch back to the PowerPoint, if you don't see the PowerPoint, come back and after we do this, let me know. So the dollars up here are kind of fuzzy, which they don't really matter for this particular one, as I said the other day. So I literally just listed all the ones that were here just to see. So this is an expense budget. See how we talked about, remember the other day, whether you had a revenue, an expense, or an operating budget, right? So this is just expenses. So this is not an operating budget per se, because it doesn't have any revenue here. These are just things they're going to spend money on. And you can tell this is over several quarters. And then the whole year is here. This is their totals. And so we're just looking at, like, what are we thinking about as far as direct or indirect costs? So what are the things that we can actually nail down and we know how much they are? So the first column is to say, okay, is this a direct or an indirect cost? Because the direct cost, you have probably a little bit more as a manager capability of controlling, right? And not always, but like the indirects are the sort of the way where you can find yourself in a jam, because depending on who is calculating your indirect costs, and again, those cost pools and cost drivers that we mentioned the other day, depending on how that's coming out for you, some of those indirects maybe you may just get stuck with as far as dollars wise. So you can't really necessarily control some of those things. And it makes it more difficult when we're actually trying to adjust our budgets. So the directs are really the ones that we might have some control over most of the time. So notice here, as I just have these listed, so of the direct ones, salaries, benefits, payroll taxes, depreciation, transportation, insurance, training supplies, and others. So several of these are actual direct costs. And then the things that would be indirect that would either come from a cost allocation plan, or that would come from a rate, a cost allocation rate, or that would be used using those cost pools and cost drivers that we talked about. Like I said, that would be your professional fees. The rent is an indirect because you're probably sharing it. Now, it would be direct. And again, these are all hypotheticals since this is in our actual budget, right? So some of these could change if we knew more information about them. But in this case, like I said, the indirect for the rent, we're assuming there's probably a shared space with other programs within the department. If that was your only space, then as far as rental goes, that would be a direct cost. You would know how much that was, and you would be able to do that. So then there's also the communications. That's indirect cost as well. So again, most of these are direct costs. There's a few here that would be indirect, and that's where you would want to identify with your financial specialist or whoever the financial person is. Like I said the other day at the state health department, that's going to be the FS, the financial specialist. But at a more local or county level, it may be somebody who actually works for the county. It might be somebody who the county contracts out with. So it might take a little bit of digging to figure out who this is that is actually doing your indirect. And get a meeting with them, okay? And so then the other piece that we talked about was whether or not costs were fixed, variable, mixed, or step. So remember, we said variable costs sort of went like up a straight line, right? As we used more of something, the cost went up for each one. So that was just like that line on that graph that went. So that was variable, those things changed. And then we have the fixed costs, and that's where that line went kind of straight across. And we said, remember, that would be like if you just paid a flat fee for something and it didn't change no matter how much you were using something. And then we have the ones that were mixed, where part of it is variable and part of it was fixed. And the example I think I used is in the olden days, the cell phones, right? You paid for the line, but then you also had to pay like per text message. So that would be a mixed, where it was part fixed and part variable. And then finally with the step, that is where we use that healthcare worker, where we said our healthcare worker could see 20 patients for that salary, like say at $50,000. But then once we hit 21 patients, if we were going to see more than 20, we would then have to bump up to that 100,000 in our example, right? So that would be a step cost. It was fixed until a certain point, and then it would jump up to the next level. So you're going to see that I have a bunch of different answers here in the box. And that's because anytime it's going to be a step cost, it probably was a fixed cost to begin with, right? So if you think about salaries, it's what we talked about. We would know that first worker, if that's all we were going to hire, that person would be a fixed cost, correct? Because we would know exactly that's the $50,000. But then it also could turn into a step if we find ourselves in need of an additional employee at that rate to cover who we wanted, as far as clientele goes. If we hit that 20 mark, if we were going to go ahead and bump up. So again, a lot of these fixed costs can also turn into step costs. So it's just good to look at your own budget and think about which of these costs are fixed and could they become step? Where do you have to pay attention that this might then jump and that would change your budget tremendously? Again, I know some of you are doing grants on a year-to-year renewal basis, and makes you very apprehensive because you have to renew for that year. But the one good thing about doing the grant renewal on a yearly basis is it gives you a little more time to see what's going on year to year, and then sort of plan accordingly when you go to do your new budget narrative, and where were you spending money, where maybe did you not spend as much money. If you're doing one for a 3 or a 5 year grant, it's much harder to predict. When we talked about that relative range the other day at the very end, we said, when you're doing this budgeting and the forecasting, you're only as good as that relative range. So once we get moving like 3, 4, 5 years out, again, most of us didn't, obviously all of us didn't foresee COVID coming in the way that it did. So that changed the way all of us did business for quite a while. But we also didn't necessarily think about what the inflation aspect was going to do on the other side of that. And so it gets really difficult for us when we start talking about budgeting in those kind of ways that we can actually look in the future. So the upside to the year-to-year renewal is that we have a little more time to sort of think about some of these costs that are maybe fixed that could potentially become step as our programs grow and change. Again, even if you're going to do something that's a 3 to 5 year type grant, you're still going to want to identify which one of these are fixed and which ones are step, or both, right? So some of these, so again, salaries and benefits, these would all change if we bumped to having to have more people, they would become step, otherwise they're fixed. Professional fees, same thing. If we're paying somebody, we should know that those are fixed. They might also be mixed in the way that you're paying them for a particular service up to a certain point. And then it might be variable as well. And that could jump also. And then our rent, we should know is fixed. Now, obviously that would just be for the year at the time. Your lease might go up and it might change the next year, but then it would become fixed again. It's not necessarily a step. You're not really jumping to twice as much. We hope you're not jumping to the rent that's twice as much for the next year. So that would still become a fixed cost, and you would be able to adjust for that in your budget for the next year. And the same thing with depreciation, that has a fixed rate on a yearly basis, so you would at least know for the budget at hand. Transportation could be variable. It might be fixed if you're using a per diem based on the state. So again, this kind of thing is just a guidance to think about this particular budget. Yours could be a little bit different than this. You would really need to think about if some of these do change. And if they do change, then they are variable. And if there's something that you can say it's not going to be any different than this for the year, as far as what you're trying to do as your budgeting, then that would be considered the fixed. And then of course, these variable ones, these change, right? Because unless you have trainings and you're only going to do 2 this year and that's all you can do, and there's not going to be any other way that's going to come up, then that could become a fixed cost. So just one thing to think about: are yours direct? Are they indirect? Are they fixed, step, mixed, or variable? Okay, so that was the thing we ended with the other day. So let's get us back right into here. I think that should have popped right back up to the PowerPoint.
It did.
Okay, thank you. All right, so I think I have here what we're going to learn about today. We're going to be able to calculate a simple variance analysis, and we're going to be, I put this, implement budget cuts effectively. None of us wants to do that. We're actually going to talk about adjusting the budget and what are some different techniques we might use if we find ourselves in that position. And there's a difference sort of between what we can do with our actual grants. Well, remember the other day, on Tuesday, we said managers have to do what they say they're going to do. That's like the #1 thing. And so some of the ways we won't be able to necessarily make adjustments to our current budget if it's a grant budget, but we will be able to make some changes around the outside. So I'm really just going to give you some tools today to show you how you might play around with that and perhaps come up with some creative ways to make adjustments when those are necessary, because all of us are always dealing with the fact that we have less dollars to spend to do more work on a regular basis, okay? And then we're gonna recognize the importance of documentation. And this is the part where everybody goes, oh, documenting, right? But we really have to do, it's so important. It's vital for your grant. It's vital to keep your grant and to do several other things. So we're gonna talk about the importance of that documentation. And then with the homework discussion, we already discussed that. So I'm just going to start us off with a little game today. It's called the Mystery Budget Challenge. It's not really a game, but you get to look at a budget. And you should have this in your folder. And it is called, let me just make sure I have it. It's actually called the Mystery Budget. Okay, and then it looks like this. So this is a mystery budget. You don't really know what it's for. So basically what this is to do today, again, to wake us up a little bit and get us thinking about budgets, because that's what we all love to do on a Thursday morning, is think about budgets. But we want to just look at this, and I have put 5 different questions on here. And so I didn't give you any additional information. So this is kind of twofold. One, what can you figure out by looking at this mystery budget? And can we answer these questions? And then if somebody was looking at your budget and I asked these same kind of questions, would they be able to answer them? So you're going to notice on this, some of the entries are starting to get more like a budget narrative rather than just a budget listing. And that's going to help us later to see the importance of that budget narrative and why it matters. So I'm going to give you just a couple minutes to look over this project budget and see if you can answer these questions, and then I will come back and we'll see what the answers are. And I will note from before I get too far, I forgot to say something. The first question asked about the payroll employee. Notice that there are splits between those who are salaried and those who are not. So there can be one answer or there could be one from each category. So don't let that kind of set you back when you're trying to answer these questions, because that's the first one out the gate. So you can actually talk about it in terms of the salaried employees and the other personnel, or again, you can just note that there is a difference between the two. Okay, so let's just sort of look at this together and see if we're on the right track. Okay, so in the first question, it says which payroll employees are going to spend the most time on this project. And again, that's where we need to think about the difference between clarifying time and clarifying money, right? So if we look at the expenses when it comes to the personnel total, if we're looking across the board, if we're just looking at dollar amount, as far as who's going to do, which employee is going to spend the most time, right, on the project, how would we know? What are we recognizing? What do we see here? Anybody want to give it a shot? Let's say we start with the salaried personnel. Anybody want to throw that in the chat? I can't even see the chat. So if there is one, I can't see it. So I'm going to pretend I don't see any. Okay, so I'm just going to go ahead and talk about it a little bit here. All right, so the payroll, if we're looking at the employee who's going to spend the most time on this project, if we look at the salary personnel, we can tell that the associate program director is going to spend 5% time there. So if we're actually just looking at the salary, we're looking at that and we see the assistant, though, is making $6,000. So see, there's a difference if you're talking about how much time versus how much money. So that's only 2% of the assistant's actual time, right? And that's 5% of the associate program directors. So that if we're talking about time, we would say the associate program director is giving the most time out of the salaried employees. But if we're looking at the cost as far as our program goes, then we would talk about paying the assistant the $6,000. But if we jump down out of that salary personnel, if we're talking about money, we're actually going to spend the most on this project coordinator, right? Because that's $8,000 that we're spending in this. And so again, it looks like some of the directors of the overall program are going to put in a little bit of time, but they're not really running the show. It looks like perhaps the project coordinator is going to be doing most of the work here, at least as far as the pay goes. But see what's missing here in this little mystery budget? We don't have any information about the project coordinator. Clearly, this is somebody that they're just hiring. They're going to pay that service for that $8,000, because notice it's not a percentage of their time that they're spending on this project. So this is all that they're doing for this particular program. It's just this, they're hiring this person outside. Obviously, notice it's not a salaried position. So you're not including fringe and all that. And notice they did remember to include the fringe pretty low there at that 18%, which we talked about the other day, can run anywhere up to 32. Sometimes it's close to 50, depending on what the organization is. Okay, so the next question says, where's the project going to take place? So if we start to look down a little bit further, we can see it mentioned a couple different times, one in the expenses and one down there in the income. Notice this has an expense and an income. So this is called an operating budget, right? Because it's both the revenue and expenses. So if you'll see this twice here, it mentions this idea of library space, right? You see where it says library space here and the library system space donation down here. So we know that it's going to take place at the library, at least at one, perhaps several libraries. And then it says, how many activities will there be? Well, this again is where this narrative piece is already starting to come in for us. We can see it by looking at this library space usage fee and at the artist fees. We can see there are 10 apps. So we know there's going to be 10 somethings, 10 things, that's going to be 10. And what are these activities going to consist of? Well, we don't know for certain because it hasn't given us a very detailed explanation. And I picked this on a reason. If you're looking at this thinking, how are we supposed to know this? Again, you're supposed to just kind of guess a little bit here. But this is why I said the budget narrative is so important, because if you are somebody who is giving a grant, if you handed me just this, where it partially has a narrative, but it doesn't have a lot of explanation, it's going to be very difficult for me as an outsider to be able to tell what you're using this money for, okay? And so you would want to take it a step further in that budget narrative and give me some more information so I'm not guessing. You don't want your grantor guessing, okay? You want to be sure that they know exactly what it is that you're going to do with their money, and then you want to stick to it. So if we look, we can tell because of this idea of artist fees, there must be some sort of artist workshop coming up where they're maybe opening, like say, a painting class or an art sketching class to the community at the library, okay? So we can see that the artist fees, they're going to do it 10 times, which matches up with the library space usage fee. And then if you bump down there, it says, how are we going to pay for this, right? So if we look at the income that's coming in, we can see that there's a donation from Con Edison of $30,000. It looks like this library system space donation is at 5, and that's an in-kind contribution, right? Because they're just giving us the space. It's worth $5,000, but they're not actually giving us $5,000. That's an in-kind contribution. So that's a good example of the difference between somebody giving us cash, right, which is like a grant or a donation, and somebody potentially just letting us use that space where we don't have to pay for it. So here's what it would be at the top. The usage fee is $5,000, but you see they're going to give us the space so it comes off at the other end. So that would actually then total out to being 0 that we're spending on the space. And if you look, we also are getting a city agency challenge grant for $15,000. But notice this must be where we're asking for some additional funding, okay? So this is probably something that is going and should have a better narrative to go with it. It looks like we're looking for Foundation 1 and 2, right? Obviously, if we knew who they were, we would put their names in specifically. So it looks like we're still trying to find 2 additional grants for $5,000 each, okay? So again, if yours looks sort of like this, at least even if you just have an expense budget and don't have an income, your budget itself probably just lists program director and how much it is. Probably doesn't even have the percentages next to it. Certainly probably doesn't have the 10 at 500. But when you're going to break it down into that budget narrative, as we get to that, you're going to want to be at least this specific and probably a little bit more descriptive to go with the specifics. Okay. Are we good on the mystery budget? Okay. All right. So I'm going to go back here to our slides, I think. And we're going to talk a little bit about handling the grantor's money. Okay. So when the grant arrives, right? So let's say you got that grant and then here it comes. So of course, we all know that it might come via check. It might come through electronic transfer. Obviously, it needs to be assigned an account number. Some of you probably will never see any of this from the top. Some of you actually will have to address it. So I'm sort of going to cover it like you might actually have to figure out what to do with the money. Again, most of you are using accounting services that comes to this, and you may never even know when it hits or how it's going to come. But you know, obviously it needs its own account, an account number in your chart of accounts. You want to make sure that everything that's coming out of that is debited or credited for that entire amount of funds that you're going to receive in that account. Here's the other thing. You guys are probably used to saying, okay, the difference between debit and credit, right? So if we take something out of our account, that's a debit. And then if we add something into the account, that's a credit. You'll notice that if you start to talk to your accounting people, it's kind of the opposite again, because they're going to use double entry bookkeeping or an accounting software. So this may be where you and your financial specialist have to kind of get on the same page. The financial specialist should understand that you're not used to doing double entry accounting, so you don't have a ledger that does debits and credits at the same time. And so that's kind of a learning curve for us. So if you're not using an accounting software, you need to think about it in terms of what are they telling you versus what you're actually thinking. So that might be a little bit of a learning process, okay? Because what we actually call a debit, an accountant calls a credit, okay? So it's very backwards. And if you're not very familiar with that, again, that's what makes most of us shy away from those kind of things. So we're not going to spend time talking about double entry accounting, because hopefully your financial specialist would be able to talk to you in terms of what I would call the layperson's terminology rather than their double entry. And if not, they should at least be able to explain to you for the purposes of your grant, okay? So your project budget, your program budget, whichever it is, shows you how the total cash is going to be spent, right? So you are very specific. Normally, grantors require a budget that has these several line items like we just looked at in that mystery budget. And it's often divided by types of direct cost expenditures that we talked about, those direct costs versus indirect costs. What do we have in there are some similar arrangement. So if this line item budget, this is like your project budget. It tells you how much you can spend on each type of direct expense. And that budget narrative that will go with it gives the detail, okay? So you have the budget narrative that's actually giving us this exact amount of how we're actually going to spend these things, okay? So we want to talk a little bit, we're going to talk, I think, in a few, we're going to talk about the budget narrative in a few more slides. So we don't want to get too far ahead of ourselves, okay? So when we're handling the money, of course, we want to make all expenditures with check, never with cash. We never want to, the only exception to this no cash rule is if you have petty cash for something small. Typically, you want to spend petty cash under $20. So you want to set up the fund by writing that check to cash and annotating it as petty cash if you're doing that. So anytime you spend cash, clearly make sure you have the receipts to go with that, because you have to be able to give those if you would need to turn that back in with your grant for funding. Some grants don't allow any petty cash spending, so that may be a limit for that. You want to keep that authority to spend as concentrated as possible. So you probably already have some sort of stepwise, but just in case, because again, some of you may be new to this, running the program may have just been thrown into the wolves, and now you're managing this grant and you're, making sure that you're dotting the I's and crossing the T's. So obviously staff members have to be able to go pick up the stuff they need. So if somebody's making a run to Staples and picking up paper clips or whatever, if those are things that can be used with petty cash, that's fine, but you want to make sure that not everybody has their hands in the cookie jar, right? So one way to make sure that you have this kind of financial responsibility is if you're doing any check writing, to make sure that you have a requirement there are 2 signatures on the check. So, and of course, every organization is different, but I always give that example. I go back to that basketball boosters when I was the treasurer on that. So anytime I wrote a check for the boosters, I also had to have another board member's signature on that. So even though I was the treasurer, we did have that sort of concentrated authority that I was the only one who actually was keeping track of the money. But if I was going to spend any money, I had to have somebody else to sign the check for me. Okay. So always complete documentation on expenditures of any size and kind. We're going to talk more extensively about this documentation later, but you really want to make sure that everything that you're spending anything on is totally documented, all the financial transactions that you're making. So it doesn't matter what comes up later. So a lot of us think, oh, the busy work of this. And I think one of the problems that I see now is that, you know, in the olden days, we were so used to personally like keeping our checkbook, and we were reconciling that at the end of every month, right? We were using our little ledger that used to come in the back of the checkbook. Well, for most of us now, we're paying everything electronically. So, you know, you can get on and you can see those debits that are made from your account, and we're seeing what our balance is on a lifetime basis. We're seeing transactions that are pending. So the majority of us are not really used to doing that the old-fashioned way. So when we come into work, it's a little more difficult for us to make sure we're actually tracking every single financial expense so that we can see that it's lining up with our budget. What is our budgeted expenses versus our actual expenses that we're looking at? So it's very important that we're documenting. We don't want to let that go to the wayside just because it's different than home now, okay? So if you have complete documentation, it doesn't matter what questions or problems come up later, you're going to be able to show that. You'll have the paperwork to go with it. You won't worry about, you know, oh my goodness, we missed, you know, a $5,000 payment and now we're behind because we weren't keeping very good track. So I can't stress the importance of the documentation as much. Okay, so of course, there's only two real reasons that we have missing documentation. One is that the money was spent in ways that we were not supposed to, and we don't want the grantor to know that. And the second one is that we got sloppy and we forgot. So we really wanted to make sure that we're being very meticulous for the records of expenditure. I did actually include a handout of that in your folder. So if you're not used to using a record of expenditure, you have an example one that you could use as a template. And if you've been doing it a different way, perhaps that would be something useful for you just to make a change. Okay. So up to this point now, we've really looked at finances from the viewpoint of the grantor and authorities, but governments or organizations also take a really big interest in how we handle this money. So this could be the feds, it could be the state, local, city, any other levels that apply to your organization or to your program. So you actually are responsible for those financial transactions. You got to make sure that you're meeting with all the applicable federal, state, local laws, regulations. You have to make sure that you're meeting the grantor's rules and regulations, but then you also have to look to see, because potentially some of you are using grants from different places. So this goes back to the first thing that we talked about, that the particular piece that we're focused on is this grant budget. So let's say we have grants from, you know, place A. So this grant has to be used in this way, but that may not be our total budget for our total program. Perhaps we have several grants that are actually funding the program as a whole that is considered then our total project budget or our total program budget. And so you really need to be careful if you've got multiple grants, which again, I know a lot of you are working off of more than one grant, or you're getting some direct funding from your local health department or the state health department to match up with then your grant funding that maybe comes from a federal grant. And so you really have to be careful that you're going through each of those grants and you understand what your responsibilities are and who are you responsible for when it comes to all of those things. So it's just worth some time to sit down and think, okay, where am I getting my money from, right? Who am I beholden to for this particular piece of money? And do you have it separated out in a way that you would easily be able to reapply for a grant and put the narrative in that only accounts for that particular grant funding, which perhaps means that you need to come up with an entire budget that includes all of your different grant funding. So you have it plain and simple for you to look at. But then do you also have a couple other sheets where you have said, okay, this particular grant, this is what it's budgeted, this is what we requested, this is how we're spending it. So if you're asked to do so, that you're documenting properly enough that you're not spending 3 days trying to pull that out of your overall total project, total program budget. So if you haven't split those up, if you are getting funding from more than one place, really take some time I know none of us have a minute. I get that, right? I know we're wearing multiple hats and it's very difficult to do, but just take some time and see if you can't split that up so you understand where the different pieces are coming from, okay? The other thing is you want to have regular financial reports, because as the manager of the project, you are required to have these kind of reports that keeps up to the current balance and the grant account, the balances in those budget line items and the expenditures since the last report. So you really want to do this over the lifetime of your program or your project. And how often you do this, depends on the requirements, but I would for sure say monthly. Okay, you want to at least do this once a month. You also do have a monthly financial report template in that packet, in that handout. So it is called that monthly financial report. It's just a Word document that you can use potentially to do that. If you're doing, this is a good thing to have to take with you. When I said to meet with that financial specialist at least once a month, talk about those indirects, make sure they're hitting at the estimated level so there's no surprises at the end. You're also going to see that some of the techniques that we learned, like with variance analysis, they can be used from year to year, but they also can be used month to month. So you're going to at least once a month want to be making some kind of accounting. And again, I'll go back to that treasurer's deal with the basketball booster. Once a month, I met with the board and I was actually able then, I took my stuff that was in my budget and put it on a financial document. And then I was able to share that with the rest of the board. And they could see what our balance was for the beginning, at the end of last month, where we started the month, where did we spend money? Where did we bring in money? And what was our balance then at the end? And then I could say, okay, next month, here's what we expect to see. So having that kind of financial report, then if you're asked a question along the way, again, you're not in there for 2 days trying to figure out the answer. If you keep up with it on at least once a monthly basis, you can pull it anytime that it's needed, okay? So of course, this represents the financial life. I told you there was an example there. Now payroll, again, most of you there's several options for handling payroll. Maybe your organization already has a payroll office or a person. I'm assuming that's for the majority of you as far as that goes, but depending on where you're coming from, perhaps not. Maybe the project will set up a payroll office in and of itself if it's a large enough project, or maybe you're contracting with a service provider. So I know, again, some of you with counties that are part of a county health department may actually have a service provider that does all of your payroll. So again, you want to get familiar with who that is. And regardless of that is, managing your payroll, is something that you're going to have to do, because the process of payroll accounting is very refined and exact. And the people who do this process really are very exact and precise, right? They're the numbers people. They have to be. They're handling the thing that is the most important to lots of people, and that's the money. So they're very directly answerable to every employee who gets a check. And so as the manager, you need to make sure that you're doing your job. What do they need from you to make sure that everything is smooth sailing? Okay, so your job is to ensure that all the associated paperwork is complete and properly filed, and that any of those necessary financial transactions are taking place. So you don't want to just assume that whoever's taking care of the payroll has everything they need. You want to sit down and have a conversation with them. Who are you employing? What are you doing when you hire somebody new, right? That might have to go through HR to begin with, but then we want to make sure that payroll's got that covered, because we want to make sure that they're taking out what they should be for this kind of process, because otherwise we're going to find ourselves in trouble. Do you need to transfer internal funds back to cover some of this? Does your main grant account, are they debiting out the money that they need to for things like FICA and SUDA and FUTA that we talked about the other day? Those different kind of fringe benefits, those taxes, those matching taxes that we have to pay, are they covered by that healthcare or insurance or retirement plan? What are the things that we're seeing, right? So every time you do this, we want to make sure that paperwork is filed. And again, this internal transfer of funds, it's super important to make sure that you've checked that anytime that you have employees, that do they have those W-2 forms? Are you issuing them to employees? Are they getting the W-4 forms when you're bringing somebody in for the yearly? Do you have quarterly SUTA reports? All of those kind of things. And you're saying, I don't want to deal with all this. That's the payroll department. But you really want to make sure that you guys are on the same page. I mean, that's what I'm really trying to get at here, is that, the federal government and your state government that don't really have a sense of humor here when it comes to paying those taxes, okay? And so you want to make sure, because we don't want to put our grants in jeopardy at all. So while the payroll people know what they're doing, they know their job, you still want to understand the process enough to make sure that you can double check and verify that everything is as it should be, and that they're not waiting on something from you to make sure that happens, okay? And if they are pulling that money out of your grant funding to cover these costs, you want to double check that that's what's coming out is what should be coming out, okay? And also, it's good for you to have as an organization as a whole, a personnel reporting checklist, okay? And you have that, one of those, it's also in your packet for the handout for today. So do you have a file of everybody? Can you pull their information without having to go to HR or without having to go to the payroll department? Can you see when they started, what they make? Did they make changes? Have they adjusted anything? Are you paying out the amount that you should be for them? Have you done a pay increase? Did they change the amount of dependents that they were filing for the year? What has changed? What's different for those kind of things? And again, are you on the same page? Because that stuff does change from year to year. Okay, so that's the payroll. And then when we talk a little bit about purchasing services, for this, some of you will actually have to do some contracting, or you're going to have to potentially buy something, like even if it's just syringes that you're going to need to purchase, right? Some of you are going to have to make some, maybe not major purchases, but maybe have to look at different options, right? So the first thing, if we're getting into this purchasing of services, to keep our costs low, you have to know exactly what it is that you want, right? So this is going to require some research. You want to create a job specification document. So you want to say, okay, this is specifically what I need, how many I need, when do I need them? And then you're going to want to get bids, right? So now you're thinking, what? Now I'm a general contractor, I'm out here bidding, no. But you might, I mean, you may have to, like I said, work with different companies. So for most of us, if we have to use any sort of supplies that are going to come in bulk, we're going to need to get a bid on some of those bigger ticket items and to see what it is that they can come up with. You're at least going to want to check a couple different companies, right? We don't want to just give it to our neighbor down the street who we think can get us those boxes, you know, by the end of the month. We want to make sure that we're getting the lowest cost product that's the highest quality, right? That does the job that we want to do. So if you're in a position where you're talking about purchasing services or items, whatever that is, we still want to make sure. You're always going to want to get references and check with them, especially if we're hiring for services for people. If we're hiring somebody, let's say we're contracting out for a mental health care provider that's not going to be actually employed for us, we want to be able to check their references like we would with anything else. If we have an actual bid, make sure you're responding to that in writing. You want to oversee the work on a regular basis and be in charge. They're working for you, and pay only when the work is completed to your satisfaction, right? So those are just basic principles if you're going to be as far as services goes. And I know a lot of you probably are not going to be in that position, but you might even be contracting for people as a service contract. So one of the other things that in the whole grant world, and I'm going to take this from this Grant Winners Toolkit. So these are just some financial management maxims. So I've got these on this slide and the next one. There's just several things, and they're mostly common sense, but they're kind of a good thing to keep. You know, if some of you have those sticky notes on your computer that kind of remind you, or you want to hang these on the wall, right? These are just some things for us to remember, you know, on a regular basis that really gets us into remembering why we're doing what we're doing as the manager of the money, okay? So these are just, again, some common sense things. Are we complying with our organization's financial policies and procedures, right? So again, the part of the problem with being the grant manager is that you are beholden to several different pieces at the same time. You're beholden to your organization that you're under, and perhaps as that we refer back to that org chart that I talked about the other day, maybe it's the whole state DPHHS, but then you might be under Child and Family Services as a program underneath that umbrella. So you might have multiple things that you're beholden to as far as financial policies within the organization, but then also, where does your grant come from, right? Is that from the Bill and Melinda Gates Foundation, right? Is that the Ryan White grant? Like where are you getting that money? Is something coming from the federal or from the state, or does it multiple? So think about that. First, think about your organization and then who is coming with you. We want to spend the money the way you said you would in your proposal. So this is the super important that I keep coming back to on this budget narrative. We want to really make sure that you are spending the money the way you said you would, okay? And if you have to make adjustments, remember, get authorization first, okay? Don't make any changes to the way you're spending that money unless you have okayed it with somebody else, because you will risk that. And I can't stress that enough. Like I said, when I've talked to the subject matter experts, the CFOs, at state level health departments, this is one of the things that people get in trouble with the most, is not documenting properly and making changes to the budget that they think, oh, well, I'm still within range of the whole budget, I'm going to shift funds from here to here. You can't do that unless you get permission to do so. Okay, you don't want to be moving the money. So this one is super important. Spend the money the way you said you would in that proposal or in that budget narrative when you're requesting the money. You want to document every financial transaction, no matter how small. You don't want anybody to come to you and ask where that $2.50 were, because you're not going to remember. Okay, it's just not going to happen later. So make sure, I mean, all of us have great memories, but we're juggling so many hats, it's very difficult. So we want to be able to, if somebody asks us a question, we can pull that right up. We want to be sure we're using professionals for any job that we're not sure about. So again, if you have a question about your indirect costs or about whether or not, you know, your grant is filing the taxes properly, go ask the expert. Don't make an assumption that you know what you're doing when it comes to those kind of things. And we want to be sure we're complying with the reporting requirements of our grantor, our organization, federal, state, and local governments. So that's a lot. Again, I would suggest maybe sometime in the next week or so, sit down and think, do I have these things broken down in the way that I need to? Am I complying with everything, each piece of this total program budget? And then the second slide, these are just pretty simple. Be thorough, be on time, be prudent, be honest. And when in doubt, ask the fiscal people, okay? Because those are the ones who actually know more than we do, and they can help us get back on track, okay? That's what they get paid for. This is why most of the payroll office or the accounting, that's why it comes in indirect cost, because each of the different programs are using their services and you're paying for them anyway, right? So you just really want to make sure that when you're in doubt, you go talk to those kind of people. When in doubt, always ask first. Okay, so let's get into some little hands-on kind of activity today. We're going to talk about a variance analysis. So I'm going to spend a few minutes here just talking about what this actually is. So variance analysis focuses on differences between the realized values and what we forecasted, okay? It's an important technique for controlling financial performance. And in accounting, variance is the difference between an actual value and the budgeted value, okay? So while we hope that what we have exactly budgeted is exactly the dollar amount that we spent, most of you who have ever done a budget of any kind, even at home, know that what we have budgeted isn't necessarily what we're going to get exactly on the actual budget. And so variance analysis is an examination and an interpretation of the differences of what has actually happened and what was planned, okay? So if the budget is based on realistic expectations, and it should be, right? We want our budget to be as spot on as we possibly can, especially when we're doing it for work, right? I think we get a little bit, if any of you are used to doing budgets at home, right? Think about that. Maybe we don't put down as much as we spend on groceries in that budget, or that we spend on gas, or that we spend on going to the movies or out to eat, right? But we want to be as specific and realistic as we actually can. We would love to see that we didn't have any variance when we do a variance analysis. But this is actually a really useful tool that can help keep you on track. It can help you provide you as a manager with some seriously useful information. And it's not going to give you all the answers. We're going to see an example here in a minute of how we can start to ask the right questions, okay? And so we're going to look first at an example, these actions, how these actions are taken, and what we can kind of look for based on this particular tool. So it can help us to really dramatically improve the operations and our financial performance for your program and for the organization as a whole, okay? So many of the variances you're going to see are controllable. That means they can be corrected by your actions. And if that's the case, you can take action so that you can keep yourself from waiting. So we're going to look at something that looks at a year's worth of data, okay? And you always want to do that. You want to see from what we budgeted for the actual year versus what we actually spent. But I would suggest doing this variance analysis month over month, okay? Or at the very least, and might be even a more useful tool, is to take last year's budget at a month by month and compare it to this year's budget on a variance analysis. What did you spend differently this year than last year? And how does that line up with the budget that you are using? Because that's going to help give you some information as far as when you're applying for that grant again, right? Did something happen this year that was an anomaly that we had to make some sweeping changes? We don't really want to use that as what we're going to put in for the budget narrative is going to change. So the way to check that is to say, okay, wait. And that's going to help us to kind of establish whether we're fitting ourselves into this budget quarterly trap that I kind of mentioned the other day. Okay, so one thing I want to note here, any of these tools that we're using today, don't use them as a way to assign blame. Okay, it's very easy when we say, oh my goodness, department XYZ spent this much extra. We don't want to use the tools for blaming. Okay, so what we want to do is use the variance analysis to uncover the cause of operational problems so that these problems can be corrected as quickly as possible, or that we can avoid them or minimize them in the future, right? So not all variances are going to be controllable by you as a manager, but knowing what they are can make us dig a little bit deeper, and we can really look at the difference between these two things, okay? So here's the thing, variance analysis, as I mentioned, is a technique used in budgeting that's going to take those realized values compared to the budgeted. So we're going to talk about actual versus budgeted, okay? So let's just start with this exhibit. So we're going to take this through a couple steps. This is a dental clinic's first quarter budget that's on the slide. We're going to assume that the quarter's over and the finance office has provided the manager with the actual expenses. So this is first quarter versus annual. That's what they're looking at. So if we're going to conduct this variance analysis, the manager has to compare what happened in the first quarter with what was expected to happen. Then she's going to have to determine any problem areas and take action to ensure that at the close of the year, those actual expenses are in line with those projected at the beginning of the year. Okay. Now, here's an important note about this particular budget. This one is divided by 4 quarters. And remember what I said the other day, that could get you into that quarterly budget trap, right? If your program spends more money in a different part of the year, if you just break that budget down by quarter and divide by 4, you're going to see some serious variance, right? One quarter you're going to look like you're way under budget, and the next quarter you're going to look like you're way over budget, right? So this is, again, the value of going back to see the last couple of years worth of data. Did you spend a lot more money? Like I think I used the example the other day about the vaccination clinics, right? What if we're talking about flu season? So you're talking late September, October into November, you're using a lot more services. Maybe you're bringing in some income for being able to charge for that you don't get perhaps in March, right? So you really want to think about, when are you spending that money? Not just on a yearly, but let's break that down, and perhaps not even quarterly, because that might get us to where, like I said, if we did a variance analysis, it's going to be like, wow, we were really under budget for that third quarter, but we were really over budget on the fourth quarter, right? And so we don't want to do that. We want to make sure that we take that overall money for the year and break it down into something that's reasonable. What is changing? And maybe it's seasonal. Maybe it's season to season that you could do it, and it might not necessarily break down into quarters then. So the best way for you to do it is to think about your own personal, that budget that you're using for your program, and what is the best way to break that down so that when we do these kind of variance analysis and these tools, that we're getting the most useful information for us, okay? Because again, we don't want to just show that we had a surplus in quarter 1 and a deficit in quarter 4. That's not very useful to us. So if we look at this, so that's the first one. So this is just the general, okay, this doesn't give us a whole lot of information. We can see the director compensation, but again, this is compared for the quarter versus, so we could multiply this by 4 and it would show, here we go. But let's look at the next page, okay? Here is what was budgeted for the first quarter for each of these pieces, okay? And that total, remember, we just looked at $70,000, $6. And when we look at the actual results of what we spent, we see that we're over. Now, by about almost $640, give or take a couple. So $637, we're over $637. We say, well, that's not too bad as far as our $70,000 budget. But again, if this is only one quarter, if we keep doing this, we're going to be over a few $1,000s by the end of the year, right? So checking ourselves and doing this variance analysis will allow us to see how we're staying on track, right? Okay, so in this case, what we're doing, and here you can add and subtract this differently, depending, it's just whichever, you're going to get the same answer. It's just going to be whether or not you get a negative sign to go with it. Okay, so in this one, this is the budget minus the actual. So we're going to stick with that formula. You can do it the other way around as well. Notice anything that would be a negative on this example is in parentheses, okay? So if we took what we paid the director for the initial versus what we actually paid them, $479 is the difference, okay? So if we take that divided by what we actually said was the budget, we can figure out and multiply it by 100. We can figure out this variance percentage, okay? So the first thing we want to know is the dollar difference. And notice I said it was that we were down, I looked from here to here and saw that we were actually $637 in the hole, okay? We're down, and that's quarter number one. But if we want to look at this, we can say, okay, well, where's the biggest discrepancy, right? So we can look at the dollar amount. And again, those of us who are not big math fans, using the percentage kind of helps us a little bit better. We can tell right away, right? Where's our biggest one? Our biggest deficit here. So we're looking in a percentage column for the highest percentage that has the brackets around it, right? So pretty quickly as we scroll through here, we can see that this 22.3%, right? So it's this hygienist compensation. This is the place, okay, as far as percentages where we're losing, we're down. Okay, look at this $1,573 that we're off here. So let's actually look to see, we want to know a little bit more. So this is what I said about variance analysis, right? That allows us to say, okay, I see this, now what? Okay, so we can dig a little bit deeper. So if we do that, we can look at this exhibit. So we pulled out the hygienist compensation and we looked at how many hours and what the pay was. What did we actually budget here? We budgeted a total of $7,041. But we see the actual results. Look, we didn't even use them as much as we thought we were going to. Our hours were not the problem. We didn't, because originally we could have just been like, well, we had them for too many hours, but we didn't. We didn't actually do that. What we did do though was we underestimated how much we were going to have to pay them, right? Which is bad. And of course that could be because of inflation or because that's how we could get them to come to work, because that's the new, cost, the standard for that. So we want to see like, what is that? So look, we're at a variance of almost $3.60 an hour. So that's killing us, right? And that percentage then is 29.3. So it gives us this total percentage. Total compensation is 22.3% that we're in the hole. So now that we've identified this, we can make some changes, okay? Now, this may not look good, right? Because at this whole point, what this is telling us is that we have to pay them more than we thought. And we're not going to get any more money. None of us is going to be like, hey, it costs more for these hygienists. So we're either going to have to continue to reduce the number of hours that these are here, or maybe get some volunteers to come in and do it, or we're going to have to not see as many patients at this particular dental clinic because it's costing us too much, at least for now. But we can use this information when we get ready to do our new budget, right? We can show that we're going to need some additional funding because clearly the cost per hour of the hygienist has gone up. We've not gone over hours, so we've done okay there, but we're losing here in this money and we can't do that. So for now, we're going to have to make some changes to the program before the end of the year until we can find a way to make up for these costs, right? Or again, this is for the time where you could do some collaboration or some working with partnerships that we can make sure that cost we're keeping up with, okay? All right, so here's what I want to do. We're going to actually, let me pull you back here. I see that we're at the 9 o'clock mark. So why don't you take just a couple minutes, get some water, some coffee, use the restroom if you need to, and then we're actually going to do a practice variance analysis example. So if you're coming back in just a couple minutes, it's in your folder. It's actually in an Excel sheet. It's called variance analysis example. So we're going to go and we'll go through that and see how that works for us in just a couple minutes. Okay, so hopefully you took a quick break and are ready to get back at it. So we're, like I said, this handout is in there called a variance analysis example. It's an Excel sheet. And this is just a very short little budget. Some of yours are probably longer than this, or at least should be broken down a little bit better. So notice this one just has salaries as a whole. It doesn't have the different people. So obviously, normally when you're looking at this, it probably does have several different line items of this. But again, it's just a practice one for us to get sort of the difference, and we can actually look at this. And so here is what we actually spent. And so this is sort of backwards, right? Before we talked about what was budgeted versus what was actual. So we have to be careful when we're actually doing some subtraction here in the variance analysis to do it. So if we're looking at this, we see that the expenses are at the top for the personnel costs and then the total for other costs. So once again, this is an expense budget, doesn't have any revenue in it, has only the things we're spending. So it's not an operating budget. It is an expense budget. So we can see that there's some differences just by looking at the numbers. We can tell that they don't line up exactly, which in a perfect world is what we would have, right? We would see that everything in our actual would match specifically with our budgeted expenses. And then we could do a happy dance and everybody would be thrilled because we would be perfect and not over or under on anything. But we all know that that doesn't really work. So we want to see how close we can get, right? Like where do we have some issues? Can we make some adjustments before the next year? Again, because this is probably one that is a yearly budget, a yearly variance, so that we can see like overall where are we at as far as the health of our program. So to do this variance analysis, we just have to do some simple calculations in Excel. And again, a lot of you I know are familiar with this, but if you're not, this is not overly difficult. So Excel, we can use the cell numbers themselves to use for Excel. So hopefully this one will get our brains thinking, because when we get to adjusting the budget in a few minutes, our formulas are going to get a little more complicated than what we're using right now. And we'll have to use our brains a little bit more than we are on this one. So hopefully this is a good little introduction, get our feet wet for the variance analysis. So to calculate this, we want to start in that variance column. And remember what I said, we want to take the budget minus the actual. Budget minus the actual. So in this case, remember, start with our equal sign, right? So we want to take budget, which we can find there in D3, minus the actual. So pretty simple. I mean, again, it's a matter of you just lining it up. And this could be, you might do this for the whole year. You might do this from month to month. You might do this from, let's say this is June. So maybe you did last year's June versus this one. So the variance analysis can actually be used in lots of different ways. It's still a variance analysis. It's what did we see? So right here, we're looking at our actual versus our budgeted, right? But we might even be looking to see, is there a variance between this June and last June? So you can use this tool in a bunch of different ways, okay? Okay, so here we go. And the way I have it set up is it's going to give us this negative, okay? Obviously. So when we see a negative, that's not good, right? Or is it good, right? So think about it this way. The difference here is that we actually did what? Here's what we budgeted, and here's what we spent, okay? So in this case, we spent more than we budgeted. So it's going to show up as a negative, okay? So again, you can do it actual minus budgeted or budget minus actual. Just, you have to understand that whatever the number you're getting, what are you looking for, okay? So in this case, this means we're in the hole, 7,000, okay? So that's not good. It's not we spent 7,000 less than, it's that we spent too much, okay? So of course we can use our little handy dandy trick to go ahead and pull this down, okay? So it fills it all in for us. And then we just want to figure out the percentage of this, okay? Actually, let's do it this way. Let's do here. Let's go back. Let's do it separately. It's easier that way. So we don't make any math errors, don't have those zeros for no reason. Okay, so here, let's do it again. Equals budget minus actual. It gives us a negative. So let's just copy these to here. And then we want to go ahead and sum this up at the subtotal, right? So equals sum. And then we'll go down here and do the same thing again. So equals, we want to take our budget minus our actual. We can copy this down to here. And then we want to equal sum here. This. And then we can do our total, right? We want to, which would be to add these two together, right? So equals sum this one plus this one. Okay. And see, if we would have looked at this to begin with, look, here's what we budgeted was 3,162,000, and we only spent 3,146,000. So at first glance, you're like, hey, we're good. We spent less money than we said we did, right? But if we look, we have variance here. Anytime we see a negative, we actually spent more money there than we should have. We don't want to do that. First of all, we don't want the actual and the budget to be this far apart. Okay, that's not good. We don't want there to be the $16,000 difference, okay? Because that means that our budget is off. And we don't want to be off by that much, even if we've saved money, right? That's not good as far as, especially when you're dealing with a grant. Now, right, if we're talking about like saving money for the organization as a whole, potentially that'd be fine. But we need to spend the grant money the way we said we did. So what's the problem here? So where are the variances? What are we spending too much money on, right? Or maybe what are we not spending enough money on? So it can be twofold, because again, are we shortchanging something that we told the grantors we were going to do? Were we in a situation that something came up and we couldn't do like as many trainings or whatnot? So here we spent more. Like if we look at the training just right away, right? We said we'd only spend 50,000, but we spent 53. Well, okay, so let's think about COVID. What if we had to train everybody how to contact trace? That is going to come out of nowhere that we didn't expect for it to happen, right? So that could potentially be the reason we did so. But we want to look to see, okay, how come we're spending less money in some places and more money than we should? So just looking at this total budget, that's not enough, okay? We want to look at the differences and the percentages to do all this. So to get the percentage, you actually just want to get, we're going to say equals, and we're going to do a little calculating because we want to give it to us in a percentage. So we'll use the parentheses, and we just want to take the variance. We want to divide that, but why we actually budgeted, okay? So the variance divided by the budget, and then put the end parenthesis on, and then we want to multiply that by 100, so it gives us that percentage, okay? Multiply it by 100, and this will give us our percentage here. And then we can just do this. And then we can jump down to it again. So equals our variance divided by our budget times 100. And now once we have this, we can actually just look and say, okay, if we're looking for the things that we overspent on, we're looking for these negative percentages, right? So we can see right away, if we're scrolling through here, that training hit, right? That's 6.27%, right? That we were over budget, 6.2%. So if we're looking at percentages, that's a big deal. Now, again, you're going to say, well, it's only $3,000 difference, but as a category for what we budgeted, we're 6% over. And if we look back, here's the other thing, payroll tax, right? Notice though, what we didn't mess up was the fringe, right? We actually were a little over that, right? So remember the other day, we talked about how we make mistakes with the fringe. We did okay there. We still have a little bit of an adjustment to make, but the payroll taxes is what got us. We did spend more in salaries. So of course it makes sense then that our payroll taxes are going to be off, but we had budgeted more for the payroll taxes that should have covered most of it, and it didn't. So those are our areas that are sort of concerning at this point. So the largest one, again, overall is training, but dollars wise, right, the one that we're losing the most on is actually up here. The salaries, even though it's only 0.49% because we spend so much here. So again, the question you're asking yourself is, and it's just like when we looked at the mystery budget, I said, well, it depends. Are you looking on overall percentages? Like which one of these categories was I off the most? So as a manager, if you're trying to correct, you could say, wow, I'm 6% off of the budgeting for training. That's bad. Same with the payroll taxes. Or if you want to say, hey, which one of these are we in the hole the most on? Yikes, payroll taxes and salaries, okay? So again, the question you're asking is how you're going to answer it, right? Questions on the variance analysis. And again, this is a tool that can be used year to year versus your actual and budgeted. It can be your monthly. When you do that financial report, like what did you have budgeted for this month versus what you actually spent, that can help you identify if you have months that you're spending more than others. If you see that you're starting to have a variance analysis that's bigger, like let's say in that example I used earlier, like in April versus what you're spending in October, maybe you need to adjust the budget for those months and not fall into that quarterly trap. And it would be easier for you to see exactly where the breakdown is coming, because these tools are not useful if we can't tailor them, right? Like that's the big part for us, is to be able to tailor these things to what we're doing. Okay, so let's go to the next thing. Okay, so now we want to talk about a little bit about budget cuts, right? And I'm going to make it sound not so bad because I'm going to talk about adjusting the budget as we get there, okay? Because a lot of us know that we do get budget cuts, and this, for our grants, for the grant period, we know we're okay, right? Because we've been given the grant, we get the grant for this long, and that's how it's going to be for that particular time frame. But remember, as you all know, I'm sure, that the grant budget is not the total program budget. So if perhaps some of your funding is coming from the state or from your local health department or from, a different grant, if that funding is, cut, which I know you guys in Montana are always waiting for that every 2 years to see what you have to work for with the next 2 years, right? And so when those things are coming down, how do we deal with that? How do we deal with budget cuts? Okay. And we're going to have to get those numbers to something we can deal with. So there's some different alternatives that we can really use to do it. And then we're going to look at like a tool that might be useful for you. Okay. Because again, nobody ever wants to talk about budget cuts. Like that's not our favorite thing to do. But again, if our budgets get cut, how can we deal with that? Okay, so we just want to think about this for a couple pieces. One of the things that I see is kind of like when we do that quarterly budget trap where you get caught up in just what those 4 quarters are. If we say your budget's going to be cut for next year by a certain percentage, let's say it's 2%, that doesn't necessarily mean that you're making 2% across the board cuts, okay? And that's a problem. Like we kind of think like that. We're like, oh my gosh, we got to cut everything 2%. Okay. Now here's a really good example. In the state of California in 2015, we were in a severe drought. We have been up until the last month since 2015 and before, but we were in a severe drought. So for the first time ever, the governor, who was Governor Brown at the time, said that we were going to have mandatory water reduction in the state of California. And he said the state of California was going to reduce their water consumption by 25%. Now, so the first thought was, oh, everybody has to reduce their usage by 25%. But that is in fact not how they did it, okay? Instead, he threw it over to the State Water Resources Control Board. What they had to do was come up with a way to make 25%. So let's say, for the sake of purposes, let's say we used 100 gallons of water, okay? We were going to have to reduce that by 25% total. But how we got there was a matter of how the Water Control Board decided they were going to split the differences. So they created this tier system, and people who were using more water at the beginning were then required to reduce more to bring it down to a different, and people who were not using as much water to begin with didn't have to reduce that full 25%. So the tier structure went anywhere from 32% for people who were using a ton of water ahead of time, all the way down to 8% for people using a little bit of water that they only had to reduce a little bit. So, and not everybody went 25% across the board. We adjusted it. And so that's why I'm calling this the adjusting the budget section, because the reality is we're not just slashing, okay? When you get a percentage reduction in your overall budget, that's when you really want to go in here. And of course, if you're using these other tools as you're moving forward, it will be a little easier for you to maybe identify what we can do and what we can't do, okay? So, and I think this is the new, you should have got this. I'm hoping that you got this new one this morning. If you didn't, yeah, because Desiree says you did. Okay, so that's good, because I'm going to pull that one up. There's another one in your folder, but it's just a different kind of scenario. So let me do updated. That's the new one we want. So there are 3 different questions, 3 different scenarios here. We're only going to work through a couple of them. That way, that'll give you some time to kind of play with it later. But also, this is the template that I said that I thought you guys would appreciate over later after today. Okay, so if this gets a little bit in the weeds, that's okay, because you'll have the chance. Like I said, you have this to work. So we know that Excel works with formulas to make computations easier for us over time, right? So one of the things that I love about this particular budget, and let me go start way over here. the instructions. So here's what we're going to do. This is our adjusting the department budget. So your manager in health service organization has asked us, the program manager, for clinical support services to prepare several cost-cutting scenarios so that management can consider what to do, okay, at the new fiscal year for July 1st. So we're going to use the sample personnel budget from our department in this sheet. So the first thing is we have to figure out the original. So clearly, based on what this is saying, we were supposed to get a 5% increase January 1st. So this is what we, in this tab down here called our original budget, we're going to figure out how to increase by 5% in January, so halfway through the year. And then question one is this one. What would happen if we changed the 5% increase was reduced to 3.5 and we postponed that until April? And we're thinking, what? How we do all that? How we do all that math? Okay, so we're going to let the Excel sheet do the math for us. And again, it gets a little tricky, so just kind of work through it. And then the second one is we're going to do an alternative where we actually are reducing staff hours. And everybody's going, ah. But if we think about it, look, it's asking us to reduce from 40 to 37.5. It's not asking us to do this for the head people that are salary professions. So they're not affected because they're not paid by the hour anyway. And then we're still going to give a 5% increase though, because what we're going to do is instead of slashing, so when we're looking at this scenario, nobody likes to get hours cut, right? We get that. But what if we were able to do this and get to where we needed to be without actually having to let somebody go, right? Because sometimes we say, oh, we have to cut 10%, and this is Sally's salary as at 10% of our total budget, so we have to cut Sally. Maybe we don't have to do that, right? So this exercise lets us see how we can make adjustments, and we can just throw numbers in and kind of see where we're at. So again, this is a tool that you could use in the future, but I think will be useful because it's kind of set up for us to play around with it, okay? So let's go to the original budget section, the tab, first of all. Now, here's what I started to say a minute ago before I took us back to the instructions. If you notice right here, we're going to be able to plug and play up in this part, and we're going to use that then to fill this chart in. This particular workbook has these built in. So notice usually when you click on, you see a formula up here. You don't see that, okay? It's so that we can't erase it, can't delete it, it's in there. So you can use this time and time again. You can just change whatever you need up here. So like for your case, you could put all of the different costs that you had, all of your different expenses in here, and what the current, like for this, it's just the salaries. But you could put this in here and you could actually make changes then, and you could play around with it. And of course, it'll just change it for you because it's Excel. So it's very useful in that piece of it, okay? So the first thing we want to do is we want to kind of look at, okay, what is that original budget? So to do this, we actually want to go, this is going to be a 5% increase that takes effect January 1st, which is halfway through the year. But remember, we want to do, let's see, how much of this, July through December, that would be half the year. So we can either do 6 divided by 12, or we can just type in 50 because we know it's 50%. If we start looking at partials, like for the second question with April, we might want to put it in by the month so we don't have to figure the percentage in our head, okay? So once we do that, that's going to give us the remaining rate. So to figure this out, obviously, we can do 50 and 50, right? But to actually figure it once we get to different calculations, sort of get us in the habit, we want to say equals 1 minus this. So it gives us 50%. Because again, at some point, we're going to get to where we're like 75%, or you might be at 24%. We don't want to make math errors. So let's just let it do it for us. And in this case, we actually want to see this 5% increase. Okay, so let's just plug that in. So now those are done. So we have that set up to where we can use these cells again, because we want to reduce the amount of math errors that we're making. So remember, so July through December, what's going to happen? We want to take a 5% increase that takes effect on July 1st, halfway through the year. So the first half of the year, this is the base salary for everybody, right? So we want to figure out what they're going to get paid the first half of the year. So in order to do this, right, we just want to DH times C, so equals, what are they actually making, times the 50% rate, okay? But we want to make sure that we tell this as an absolute reference because we're going to use this to copy, right? So Excel, just brief side note, uses relative references, so it fills everything in all the way down, right? Since we want it to multiply each one of these by that same 50%, we have to use the absolute reference. So in order to do that, we can just hit, for most of you, you can probably just hit F4. Notice it puts dollar signs before the C and before the 5. So if yours doesn't do it, you can actually hop up here in the formula bar and put the dollar sign before the C and before the 5. Okay, so if it doesn't work, that's what you can do. And then you hit enter. So here's the salary for the director for July through December. So now we can take this and go ahead and grab it and copy paste it down. So it fills it in pretty quickly for us. Okay, so now we want to figure out in January 1st, it's the 5% increase. Okay, so 5% increase. So if we're looking at this 5% increase, we're going to take that off the annual salary that we currently have. Okay, so now we're going to use that B8 again, the current annual salary, but this time we're going to say, well, what's 5% increase, right? So we're going to multiply it by that 5%. So again, we're going to say equals B8 times 5%. But this is another instance where we want to multiply the 5% by everything in this column. So we want to do that as an absolute reference again. So we want to hit F4 before we hit enter. And again, then we can copy that down. So here's how much it's going to increase. Okay. So then our new base is just going to be simply our current annual salary plus the increase, right? That becomes the new base. Current salary plus our 5% increase. And then again, we can take this and copy it. Notice we didn't have to do an absolute value reference there because we actually do want it to keep moving all the way down. We're just adding those numbers from those columns. So we wanted it to go across. Okay. So now we can say, okay, we have figured up the amounts that we're going to spend July through December. And we now have this new base case. We have to figure out what we're going to spend then January through June, right? So if we're looking at that, so the January through June then just becomes our E8, right? Which is our new base case times that 50% is time remaining, right? So that's how much time we have left. So it equals our new base times the time that we have left, right? The time remaining, which in this case is still 50%. So, but we also, again, this is an absolute because we want to do multiply that 50% for everything. We're just going to drag. So go ahead and hit F4 again. So now that has filled that in. And so now it says, okay, well, what are we going to spend then for the year? Well, now we have it in two different columns. We have our July through December and our January through June. So we just have to add those together, right? So equals July through December plus January through June. And notice once we did that, see how these formulas are here? It already has it ready for us. So as soon as we filled that all in, it popped us up the wages and salaries, which is the total right here. And then it took the friends benefits for us at 29%. So this is a number you could change. So you could put in, if you know your friends is 32%, you could actually use this and put it in, and then it would calculate it for you, okay? So this is why I think this chart is handy, because again, some of these formulas are built in. You can just change this to 40% and the other to 60%, or however it is, whatever the increase is. Or what if this was a decrease? What if you were trying to say, okay, we're going to cut salaries. How can we do that across the board? We could make that a negative, right? We could decrease somebody's wages by 2% across the board if we wanted to do that. And again, maybe we don't want to always cut everybody across the board. We're going to look at in question 2, how do we do that? Okay, so this is the original budget. This is saying if we took it, the 5% increase that takes effect in January. So now let's go to question 1. So this is just what we actually were supposed to do. And then they said, okay, well, what if we waited and did it in April and it was only 3.5%? Okay, so if we go over to question 1, and you'll notice, so the original budget, I don't have an answer for, but the rest of these, the question, this is blank for us to fill in, but I have also already given you the answer keys. Okay, so if, like I said, if you do get lost or you want to practice with this or play around with it more later, you can actually see what the answers are here. We're going to look at least at this question 1, just to see how we make these adjustments. And then I'll check our time to see if we have time to go through question 2. We won't, for sure, we won't do question 3. Question 3 actually lets you do both. So, you know, for fun, this weekend, you can pull out this budget thing and do the question 3. So that'll be your fun weekend time. Okay. Okay. So again, we're still going to deal with the rates. So we want to see, okay, July through March. So this current time, that's actually going to be 9 months, right? So it's we can say equals 9 out of 12. And that's going to give us 75%. We can say, okay, then how much time is remaining? Again, that's equals 1 minus the 75%. And then how much is the increase? 3.5. Okay. So we fill those pieces in before we start. Okay, so what is July through March? What are we going to do here? If we're looking at July through March, we just want to multiply it by this 75% because that's how long it's going to get us through till, right? So that's our in our C5. So we just say equals our current salary times 75%. Again, absolute reference. And then we're going to say, okay, well, at April 3rd, we want a 3.5% increase. Again, that's going to be off the increase of the annual salary, right? So equals our annual salary times this 3.5% increase. We want to make that relative, or absolute, I'm sorry. So then what is the new base? What is our new base here? So to get that new base, we're actually just going to add our current salary plus our increase. Write that down. And now we can figure out, okay, so what are we going to be paying people off this new base from April to June, right? So again, it equals our new base, new base, times the remaining time, which in this case is 0.25%. We want that to be 25% for everybody in the thing. So we want to make that absolute reference. And then we want to see what the total is that we're going to spend for the year. So equals, what do we pay them July through March, plus what do we pay them April through June? And once we do that, here it fills in the wages and salaries and fringe for us. So what this allows us to do is say, okay, so what happens if we didn't give them as much of a raise and we waited till April to do it? Would that be enough to save us? So depending on how much money you would actually need to save, you could look, because now we can take this, the wages and salaries, 635, 291 versus what we were originally going to pay at 645. Okay, so by making that small adjustment, we were able to save about $10,000. So is that enough to cover us? Can we do that? And we can still give an increase. We just have to wait a little longer and not give as much of one, right? So this is why I said this is a good tool, because you can say, okay, well, what if I did this? And you can just plug it in and let it show you what would happen. And then you get this nice number at the bottom that you can make comparisons and you can show people, right? Because when you have to make a budget adjustment, the one thing is that people are more receptive if you can show them what you're doing and why, okay? What you're doing and why, that's a big deal, all right? Okay, so let's just go really quickly. I just want to show you, and we may not go through the whole thing because I want to make sure we cover the other stuff. This last one is the question 2 here. This actually lets us take the hours, okay? So it's going to say, how about this? We're going to reduce hourly staff from 40 hours to 35 a week, okay? We're going to do that. But then we're still going to give a pay increase of 5%. So we don't have to cut a whole person, and we're going to be able to make that adjustment. So what we would do here is we would actually just type in equals 35 out of 40. So they're going to be making 87.5% of their hours, okay? It's still going to be for half the year. We're still going to get a 5% increase. So you're saying, wait, we're going to cut our hours for half the year, but 5% increase? Well, because we want to see. We want to see what happens there, okay? And then our new time rate that's remaining, again, it's still 50%. So of course we want to say equals 1 minus 50. Okay. Okay. Now remember, here's where it gets a little bit tricky. We didn't want to take off these first 3. So we just would retype in those because we're not actually changing, because they're salaried employees. So they won't be reduced in hours because we're just going to make them work harder like all the rest of you. Okay. Or I should say longer. They'll probably have to pick up the slack when we take away these hours from the other people, right? So then what do? We want to actually take salaries with base hourly reduction. So we want to reduce this. So if we look, once we type in those 3, and we want to get to this one, we want to just take the salary that they have, which is B11, right? And we want to take that and reduce it using the B5, which is at 87%, okay? So equals this one times this reduction. Again, we're going to want to do that to all the rest of them. So we do an absolute reference. Yes. thought I set wrong again, but I didn't. Okay. We want to come all the way down here. Do that. And then, oops, click the wrong one. Oh, I didn't bring it all the way down. I didn't bring it all the way down. Okay, so here we go. Okay, there we go. All right, so now their salaries with the base hourly reduction. So now what are we going to pay them July through December? Now we can just pop back up and say, well, that's half the year. So we're going to use the salary with base reduction. So it equals this base reduction times our current rate. And again, we want to do absolute reference. We want them to be the same. That's how much we paid them. Now, in January 1st, we're going to want to take a 5% increase. So, but we still have to use the salaries with the base, right? Because now we've reduced the number of hours they're getting, but what's going to be a 5% increase on that? So it's equals the base times the 5% increase, again, absolute. Okay, so the new base then becomes what the salary reduction was plus this increase. So this is what they would be making then January through June. So that's equals their new base times that remaining rate, absolute. And then we would just add those up. So again, the equals the July through December plus January. And once we put it in there, here it is. So now we're at 564,000. Okay, so we can look, you know, back to here. That's a reduction. Here's our original. So we were in the 600s. Now, if we do it this way, we're at 635, right? Versus 45. So it gives you a little fluctuation. You can kind of see like when you plug and play what happens. Okay, so hopefully that is something that you can find that's useful. And like I said, we're not going to cover question 3. Question 3 actually lets you combine both of them. So again, for fun over the weekend, you can pull this out and say, hey kids, let's do this. So we'll get back here. So we have talked then about these. Budgets don't have to be across the board, right? We just showed you ways that we can adjust budgets that don't have to do that, okay? If you have revenue, maybe you can offset budgets by increasing the revenue. So if you're somebody who only has an expense budget, right, obviously you can't make those adjustments. But if you're somebody who is perhaps able to market a little bit better, maybe you can get somebody to collaborate with you and come in on that, that can help you market a little bit better for free. And then that could help you to increase your revenue. So if you have a total operating budget, you could make the changes like to that salary, to those expenses, but then you could also add in some adjustments for, well, what if there's an increase in revenue and we had a decrease in spending? So that, like I said, that workshop or that built in for that work table is actually pretty good. Okay, so we did that. And so here we go. We're going to talk about documentation. All right. This is super important. I cannot stress this enough. So here's 1, 2, 3, 4, 5 things of the reasons why we want to document. We want to do it to manage our project effectively. We want to do it to evaluate the project results, for information to disseminate, to inform other people, right? We don't ever want to reinvent the wheel. So if we're doing something and it's working or it's not working and other people want to see that, we for sure want to be able to show them how that's working. We want to be able to provide that guidance for replication. So again, so if somebody wants to use this later, and most importantly for you guys, as evidence to ensure your continuation, okay? So we just, super, super important that documentation, especially when it comes to budgeting, okay? Okay, let's look at to manage the project effectively. So if you're the manager, if you're managing the project, right? And remember your job was to allocate resources, right? That was from Tuesday. We talked about what managers do. They allocate resources to accomplish activities. Then we have to know what the resources are. What are your resources, right? What the activities are, in what order, at what time, and what is needed from them. And you're never going to remember all these things. So if we don't document, like, what are the resources we're managing? What are the activities that we've done? How much did that make us last year? Did we have a gala 2 years ago, or was that last year? Do we have one every year? Do we need to have one every year? Like, what are we doing? So of course, we don't want to waste time. All of you are super busy. We never want to waste that time trying to remember what we need to know, okay? So the evaluation report, right? So most of you will have at some point an evaluation component, right? This might be because the state requires it. It might be because your grant requires it. It might be because the federal government with your grant requires it. 99% of anything that comes from a government anymore, right, has an evaluation component. This is one of the most important reasons to document. While you may not actually go through a formal evaluation process, you're going to need to be able to give the grantor a report of what you've done, okay? If nothing else, in the form of the budget narrative when you're requesting that grant again, or when your project is over, okay? So this might be as simple as an end of the project report, or it might be a full evaluation. They want to know specifically what you have done and how you've spent their money. Like they want to know, we did 25 community training sessions were held for, 8.45 adults, which is 36% of the population, okay? You can only make statements like that if you have documented exactly. You can't be like, oh, we did a health fair and we had lots of people came, right? That doesn't work. We want to know specifics. And so that goes even more into not just for budgeting purposes, but for everything that you're doing, that you're spending any grant money on at all. You want to make sure that you're documenting because you want to be able to do this. And I'll give you a really quick example. So I was able to work on a foster care evaluation a couple years ago. And it was a 2-year-long project, and it was a great program, and it was working really well. And they wanted to have an actual formal evaluation. And part of the questions that they wanted to have answered, I couldn't answer because they didn't have the right documentation. They didn't have the right data, and they hadn't kept everything that they needed to answer that question. So I wasn't able to answer that specific question. Now, in some ways, I was able to go back and put together a couple case studies based on reports because those things had been documented, okay? So very, very specific to make sure that all of the pieces for everything, not just, and I don't just mean budgeting here, this is like grant management period, okay? So everything you're doing, make sure that you have documentation for that, because an evaluation can't be done if you don't have all the pieces, okay? Okay, so the next reason is to disseminate the information. This is how you're going to get the word out about your project. And grantors make this your responsibility. Like they might give you input on how and what you're going to say, like to other organizations based on what they're giving you the money for. But what are you going to say about the success of your program? What if you want somebody in your community to feel good about the project? They want evidence. Like if you want support, like how can you show that? Well, if you document and you document well, maybe it's from interviews or questionnaires from the program participants. So part of managing that grant is figuring out, are you documenting the things that are good and maybe bad about the program that you could fix or that you can use to argue for either more funding, continued funding, for getting the community involved and saying, hey, this is why we're here and this is why this matters. And this is why it matters to you. Can you do that? So what information are you going to be able to show them? Do you have results from interviews or surveys from participants? What are we doing here in the grand scheme of things? We also want to document to provide guidance for replication. Again, I said this earlier, most grants are made to fund model or demonstration projects, right? A lot of those federal funding grants are like, hey, why don't you try this and see if it works? You've pitched an idea and it's coming back. And at the heart of that then is saying that eventually this can move on and be better, right? So if you think about programs like Ryan White funding, right? Those started at the federal level, and then those are able to farm out within different health departments. And you're developing these, sometimes you can make some changes to them, but sometimes there's guidelines for that. And it comes from the idea that somebody has created this program once and it's working once they've gotten through this evaluation component, and they say, okay, so here's the steps we want to take to make this work. Again, none of us wants to reinvent the wheel, but if you're doing something and you're finding that it's working, that can be something that you include in your budget proposals that eventually might be able to be something that can be replicated across other times. And that foster care program was an exact, the way that they had the nurse as the spoke, in their hub, the nurse is the hub in there with a spoke and hub kind of model. And they were able to use that. And then actually it was moved through the state as a model that other health departments could use, because what they were finding was that it was working, right? And so the evaluation was able to do that. They did have documents, and it allowed people to replicate their program, of course, if they had funding, right? But at least there was a way for them to do that because they could show people what they did and what was working and what was not. Of course, for all of you, what you want is to be able to continue. None of us wants to put this much time and energy into our projects and our programs and not be able to have continued funding, right? So again, grantors make grants for lots of different reasons. But when grantors make grants to fund projects to solve problems, they want to see a solution. They want to see you're getting somewhere. Now, maybe we can't completely solve it, but if we're working on, getting people who are experiencing homelessness off of the street and into housing, what the grant wants to show is that we're getting people off of the street and into housing, right? Maybe we didn't solve the issue of people experiencing homelessness 100%, but we want to be able to show what we've done, right? If we want to continue to have that funding coming through, we have to be able to hit that mark, okay? So this is for our continuation, our sustainability, or our institutionalization. We want it to become permanent, right? So one aspect of this is to convince others to support the project even after the grant money stops. So some of your grants are not going to be forever. So you're going to have to find out other ways to get money. And so part of the documentation is to show people, look at what we've been able to do. Like even if we take the training center, right? We take the Montana Public Health Training Center and we think about, okay, where could we get additional grant funding? What could we show them? Here's how many trainings we've done in the past, 3-4 years. Here's where we were able to make changes to this. What if you hadn't documented all the different trainings and the different speakers, how many people participate? Think about all the ways that they're able to document what's going on at this training center, and they can use that not only to sustain the funding they were getting, but potentially to find some new partners along the way that would help them to continue doing this kind of thing in the future. And the same thing goes for you and your program and project, no matter where you're at. Okay. So here we go. I think I had a poll question here for this. If I skipped a couple other ones.
You do. Would you like to do all three of them, or would you just like to do?
Let's just do the second one because I think it's should be the second one.
Day 2, second.
All right. So which of the following are important reasons for documentation? This is mark all that apply. Now, if you're not laughing at the last piece that I put on there, right? Just trying to make sure everybody was with me. Give it just another second. It looks like there's still some clicking through there. Okay, so if you want to go ahead and share the poll, that's fine. All right, so technically the answer is all of them, right? We talked about the 5, right? And I threw in the so you don't get fired, but that's actually a big deal, right? And if you're not documenting your things, if somebody has questions that you can't answer, so that's another piece of it that we want to make sure. But I did actually only talk about the 5 specifically. I didn't talk about that, so you don't get fired. But we do want to, of course, like I said, I can't stress this enough. And even when I talk to people who are getting grants, when I talk to your chief financial officers, I hear constantly that people do not understand the super importance of documenting everything, whether that be for your budgets themselves or for the program as a whole. So it's just not busy work. It really is something super important. So you do have a documentation planning worksheet in your handout. So who documents everything? Okay. What are you going to document? All kinds of things. Okay. So this is I just gave you some examples here very quickly. All the documentation, all the people. So basically anybody who is part of your program or project is going to document. Okay. That's the deal. You want to do financial transactions, any events, processes or components. Again, there's lots of different things that we want to do. All the financial transactions, several different types of these. And these are all in your handout folder, right? So you've got an actual piece of this if you want to look at it later. In kind, cash, you for sure want to make the differences between these different kind of things, right? You want to say, okay, here's the financial transactions. Here's what we spend on a monthly. This is back to that direct versus indirect. Is it fixed, mixed, variable step costs? Is it cash that somebody's donating or that we're doing that way? Is it an in-kind like that library space? What are the project activities that you've spent? What about salaries? Anything that you've done as far as occurrences and events, right? these are things that, like I mentioned before, like the gala, a relatively short amount of time. You do it once a year, maybe once or twice a year. Don't forget to document that step. If you say we did a health fair and you're like, yay, it was a success. Why? Tell me why it was a success. Like, how are you able to specifically tell me in words and in documentation that that was what you consider successful? Like, what was our goal to begin with? How close did we get to it? What are we shooting for the next time, right? We don't want to just say, it was cool, everybody showed up, right? So maybe even an open house, same kind of thing. Again, processes and components. Typically, this happens over the duration of the project. So do you have mentors coming in? Are you doing professional development, counseling, training participants, all that kind of thing, documentation, all these different pieces that need to be followed through as far as what we're talking about, okay? All right, so how do we document? Well, we need to know what, and we need to think about how. And so some events and processes automatically. So let's say we go purchase something. We're going to get a receipt. We've got the documentation. We don't have to do anything different. We might want to put it in our Excel sheet and take it out of the budgeting part, right? Or keep track of what we're doing on a regular basis. But the reality of it is a lot of the things automatically generate documents. So realistically, what we're really thinking about is this. We're thinking about the times that we need to collect and save stuff, okay? So the real problems come from when in an instance when the activity doesn't naturally create its own document, okay? And so that's what we have to think about. If we're creating those documents, we can use this event documentation form. So again, I have one of those in your handout. So you'll notice that documentation is so important that I've given you like 5 or 6 different handouts in your folder to go with it, okay? So again, yesterday I said, don't forget, or Tuesday, I'm sorry. I said, the most important thing you can do as a manager is to do what you say you're gonna do. You want to document, right? And finally, right, don't forget the friends. Like, so if you've gotten anything out of what we've done so far for the last 2 days, I hope it's those 3 things, okay? So we're gonna look at one more thing. I wanna talk just briefly about, I just said documentation is critical. We gave you the poll on the 5 reasons. Let's talk about the budget narrative because we just have just a few minutes left, and this is where I wanted to finish today anyway, was on this. And I know I brought it up several times over the past couple of days when we were talking about the importance of this budget narrative. So for those of you who have never applied or reapplied for your grants, okay, you might not have actually had to do the budget narrative. And this is so important when it comes to getting the money. Like I said, remember when we looked at that mystery budget earlier and it was like, what are they doing here? I don't understand this. Like, we kind of could pick and choose, like, okay, they've got a couple salaried people that are kind of maybe going to help with this a little bit. And then it looks like they hired a project coordinator, and then it must be something that's going to be held at the library. And it looks like it's artists, like, but we really didn't know. Even when they put like 10 events at $500, we kind of saw the where and what, but we weren't really very clear on that. And so that's why I used that one, not only so people could pick it out, but also to see if I could say, hey, when you're doing your own budget narrative, don't assume people know what you're doing, okay? Because the person that's actually on the other side trying to say whether or not you get the grant, they may or may not have any idea about what you're doing here, especially if you're applying for like a foundation grant, right? You're going to have somebody who's like reading through the proposal. You want them to know exactly what you're asking the money for, okay? So the budget narrative is super, super important. And I'm just, again, I think budget, I said this, okay, more detailed and more in depth. And then there's an example, and there was one, let me see, I have it here. Here we go. Sample budget with justification. I have 2 examples. One is called the sample budget with justification in your folder. And I just want to do it like this, 1 page, and then we want to make it bigger. So I use this one. There's also one for an HIV program. So that's it's a PDF. So there's this one that's called sample budget justification. That's the Word doc. And then, like I said, there's an HIV one. I'm just going to use this one as an illustration, but I'm going to show you also the cool part about budget narratives is they're becoming popular. I say that because if you Google them, if you Google budget narrative example, you will get so many different examples. So what I'm telling you is this: don't do a budget narrative without following an example. There are lots of templates out there that you can use that are relatively new. Some of them are very specific to HHS, like as a federal agency. Some of them are with SAMHSA. Like, clearly they want you to do the budget narrative and they want you to do it well. So it's just a simple Google to show you. So I'm just going to show you this one really quickly. This is a budget justification. So notice personnel. So we've seen this all day, right? We've seen the project director, the grant coordinator, the clinical director. Here's the names. Obviously, we don't have somebody here yet for this one, but this is what they're going to spend. Oh, look, the clinical director is going to give their time. That's an in-kind cost. They're going to spend 20% of their time. Clearly, they're being paid from something other than this. So remember when we said the difference between your total program budget and the grant budget? So see, this person is going to work there, but they're not getting paid from this particular grant. Okay, so that Jane Doe would go into your overall total, that 5 components that we talked about on Tuesday, but it's not going into this grant. We're considering that in kind because it's not coming from here. Okay, so either they're volunteering or they're being paid from something else. So it looks as though it's volunteering into this particular grant. So here's how this is. So, and this is a very brief justification. I've seen them much more detailed. And I'll show you a couple other examples as we get finished here. But this, see the justification, we're telling exactly why do we have this money? What are they going to be doing? We want to know specifically. Guidance of 540 clients, very, very specific, okay? And here's the level of effort, here's the cost. Now, one key thing, the reason I show this example is because look, here's the non-federal match. Here's what you have to come up with. You have to do match. And remember I said, if it didn't say cash match, you didn't have to cash match it, right? So you might be able to use in kind to do a matching. But in this case, they actually listed it. Here's how much they're going to be paying. Something outside of the grant that's going to be the non-federal match. And they're very specific. We're paying Susan Johnson $13.38 an hour times 100 hours. Okay, very specific. Project director, clerical support. Here's what she's doing for that $13.38 an hour for 100 hours. She's going to do this. Okay, so budget narrative, super, super expensive. So you're taking that budget that's on that Excel sheet like you had, right? And you're putting it in here and you're going to say, here's this section. And notice it just goes down sections. You want to include it like with your budget. Here's the fringe. They didn't forget it. Here's the FICA, the workers' comp, the insurance. Here's the totals. This is the rates for each one. Rate stays the same. This is a non-federal match. So some of your grants are going to say, we're going to give you this much. You have to put in, it's looking at this about 40%, 44% that you have to put in. So they're going to give you X amount and you have to match another 40% of it to make the whole project work, okay? But again, very specific justification. Always have it on here. And then they get to travel. Look at this, $200 for flights times 2 people. Here's the total cost. So this goes back to, are you documenting? Are you doing all that research work before it's time to renew this grant, that you can very specifically plug this in and say, this is the money we need and why we need it. Here's what we've spent. Have you used your variance analysis? Can you see where there's going to be adjustments? What if airfare for the last 3 times you added this was only 200 and now it's 400? Like if you've documented and if you looked at your variance analysis and if you checked the airlines, right, at the time, you would know that this part would need to change, okay? So that's how you get yourself into being able to do what you say you're going to do for the next year or the year after that, or however you budget it, okay? So just really quickly, I want to show you, we're done. I gave you a homework assignment here too. So go do your variance analysis, okay? I know I won't see you again, but this is what you're supposed to do. What's your positive? What's your negative? How are you allocating it? Is it month by month? Is it quarterly? How does that work? Okay, and then I did just want to show you really quickly, because I pulled a couple of these up here. This is the grants one. There's the HIV one that we have on there, and I thought I had one more on there, but maybe I didn't. Yes, here's one. So here's a best practices document. So if you're just, look, I just Googled it like 3 times yesterday. Here's the SAMHSA one. It's 125 pages. So very detailed on your documentation. Here's another sample. Look, you can just plug and play and it's asking you. That's like a guideline of a worksheet. This is one that's used for best practices that I found. It just tells exactly what they're doing. Why did we get this? So if you're Googling it, you're going to find something that's useful that's pretty close to what you're doing. So just for sure, when you're reapplying for grants, that you're spending adequate. Don't wait till the last minute to do this narrative. Make sure it matches up with your budget and be as specific as you can so that they understand where you're going to spend the money and then stick to it. Okay, so I've had a lot of fun the last couple of days. I only kept this 1 minute over, so that's good. I hope you guys have enjoyed it as well. It's been a real pleasure.
Thank you. Thank you very much, Trisha. There's a lot of great information. I would like to have you all look into the chat. I have put the link for the evaluation. So if you'll please take a few minutes to fill that out, we would really appreciate it. And if you have any questions or any other feedback, please put it in the chat or reach out to us at the training center, either Emily or myself, and we're happy to answer any questions for you. With that, I will let you go. So have a great day, everyone. Thank you.